Hi there, this is Dog Mountain, and I welcome you to my YouTube channel. In this video of today, I'll actually introduce you to something that I've never actually talked about, Forex trading. But before we actually take a dive into everything, let me just show you something a little bit complex. Okay, beautiful. So here we are. Check this one out. What is it that you're seeing here? This is actually a Forex trading platform. This may be too complex if you haven't had a proper orientation, if you have never ever been educated about Forex. So what we're seeing may be a Bollinger, and what you're seeing here, the ups and lows here, these are actually the candlesticks. Now this may be too confusing, which is why we are going to start from the basics. We start by looking at the meaning of Forex, and then we'll look at scenarios where Forex is applied. Thereafter, we'll actually build on the basics that we are going to lay right now. So here we go. Okay, so now let's look at what Forex is. What then is Forex? Well, Forex is actually the short term for foreign exchange, and it refers to the global marketplace where currencies are traded against each other. It is the largest and most liquid financial market in the world, with a daily trading volume exceeding trillions of dollars. Forex trading involves buying one currency while simultaneously selling another. Okay, so now let's look at the scenarios, a couple of scenarios under which Forex applies. So currency pair trading, that is the first scenario. If we're looking at maybe two different currencies, how then does Forex apply? Okay, so this is the first scenario. So if, let's say, a trader believes that the euro pound will strengthen against the US dollar, they enter a buy order for the USD currency pair, meaning they're buying euros and selling dollars simultaneously. The outcome would be that if the euro / USD exchange rate rises as anticipated, the trader profits from the trade. However, if the exchange rate moves against their position, they may face losses. Again, I hope you understand that. So now we'll actually look at the currency pairs which are there. There are about 6 major currency pairs. So we'll actually delve into those in later videos. This is just the beginning. Let's look at the other example where Forex applies. Okay, beautiful. So the other example is actually the speculative trading. So under speculative trading, we may actually consider a scenario where a trader speculates on short-term price movements in the Forex market based on technical analysis, chart patterns, or market sentiment. They may enter and exit positions multiple times within a single trading session. The outcome may be that okay, so mostly this one depends on the trader's ability to accurately predict short-term price movements. Successful speculation can result in profits, while incorrect predictions can lead to losses. So this is the second scenario, or the second aspect of Forex. Let's look at the third one. All right, so the third aspect is actually hedging. All right, so the scenario may be that a multinational corporation operating in multiple countries exposed to currency exchange rate risk. To mitigate this risk, the company enters into forex hedging contracts to lock in exchange rates for future transactions. Okay. What would be the outcome there? The outcome may be hedging. Hedging would actually help the company protect its profits and cash flows from adverse currency fluctuations. However, if exchange rates move in favor of the company, they may miss out on potential gains. Let's look at the fourth scenario. Let's talk of the central bank interventions. The scenario is this one here. The central bank intervenes in the forex market to influence the value of its currency. For example, a central bank may sell its currency in the market to weaken it against other currencies, or buy its currency to strengthen it. What would be the outcome? The outcome of the central bank interventions can lead to short-term fluctuations in exchange rates and impact forex traders' positions. Traders need to be aware of potential interventions and their implications on currency movements. So now, after having looked at all these, what we can actually say in conclusion is that these scenarios highlight the diverse nature of forex trading, encompassing various participants, strategies, and market dynamics. Whether it's individual traders speculating on price movements or multinational corporations managing currency risks, forex trading plays a crucial role in the global economy. Now, in the next videos, we'll actually talk about the currency pairs and the major, the minor currency pairs, and how you actually consider them when you are doing the trades on the forex platform. Okay, so now so to those of you who may actually need in-depth explanations and one-on-one interactions, so that you may be able to ask questions where you feel you need enlightenment, we are actually enrolling people for this program, Forex trading. And it's one of the major programs that would actually leave you in a position where you'll be able to make money like normal business. But however, you need to learn that Forex is actually a risk undertaking. You can lose everything, especially if you lack knowledge, proper knowledge on how to go about these things, which is why we are here and would want you to get enrolled at a promotional fee of 500 kwacha, and that promotion is running from today up to Wednesday. So the numbers via which you can make payments are the ones that you're seeing there. The 0978 737642, that's an Airtel line, and then the MTN line there. Don't miss out on this opportunity to learn valuable forex trading strategies and techniques from seasoned experts at an unbeatable price. For enrollment and inquiries, please contact us at the provided mobile number, the ones that are on top. Seize the opportunity to invest in your financial future today. Enroll now. See you there. This is your friend and your brother, Doc Mountain.